The clock is ticking towards your retirement, so that brings us to 15 in 15. 15 topics in 15 seconds for Charisse. You ready to dive in?
Born ready.
All right, there you go. Let's put you on that clock. Question number one. How much money will you need to retire? According to a survey, more Americans than ever believe the magic number is $1 million. So Charisse, is $1 million the magic number?
No, there is no magic number. And quite frankly, people need to reverse their thinking because we think we have to get to this number, and that's not necessarily true. First of all, we just have to take inventory, see what your income is that is going to be coming in, cash rents, Social Security, pensions, see if you have any debt left over and see what you've saved at that point and do the math, because that magic number doesn't always work. So I want you to start thinking, how much income do I need every month? And we work backwards. And if you're somebody who saved $500,000 and you have a nice pension and Social Security, that might be all you need. But I've had people come in our office where they've saved $4 million, they have one Social Security check, they're used to living this high lifestyle, and they might be running out of money pretty soon. So we have to pay attention to that and make sure it's all going to work out for that total income plan.
Yeah, absolutely. If that doesn't show you the passion she has about how anti-magic number she is, 15 and 15, you get 15 seconds. She went 45 to make sure you at home know, do not chase a magic number for retirement. Question number two. It's understandable to have some concerns, perhaps even some fears, when it comes to using your savings in retirement. So what can people do to spend with confidence?
So number one, you need an income plan.
Okay.
That income plan has paychecks built into it to cover your foundation. You need a growth plan to keep up with inflation, and you need a protection strategy. It's that simple.
Absolutely. That's simple. You heard it right there. Question number three. What if I told you 45% of people who do not have an advisor believe the typical cost for one is between 5 and 15% of their assets? Is that a reasonable percentage?
It is ridiculous. Fire that advisory team right away. Okay?
Fired.
Fire him, because the average fee, if we're entering retirement and now we know we're going to be more conservative, it means we're going to make less money so we can protect our money. Why don't the advisors lower the fees? Your aggregate portfolio should not be higher than 1% out the door. So remember that 2% is too high. And I know most people who come in and see us, it's always 2% and higher. They don't even know it.
All right. So you heard 5, 15%, even 2%. Run,
Out.
run, get lower. Question number four, let's do taxes. A recent survey found that over 30% of every dollar a retiree spends goes to pay taxes. So are we really looking at nearly a third of our money going to Uncle Sam?
Absolutely are, because retirees saved all their money in these retirement plans, and those things are going to be taxed at the heaviest rate when we start pulling income out. So this is why we need to start working on those tax minimization strategies for the future. Taxes are on sale. We got 2 to 7 years, so take advantage of it now, even if you're already in retirement.
All right, let's keep with the tax theme. When it comes to income taxes, is it possible to receive retirement income from our life savings without having to pay income taxes?
So it takes a little bit of work.
Okay, sure.
Okay, number one. So you can actually go into a zero tax bracket in the future. So I need about 2 to 7 years to do that with you. And even if you're in your 70s, we can work this plan out. But you have to be willing to dial in, do the math, and understand what we're positioning.
Well, I imagine people want the zero tax bracket.
They sure
That
do.
sounds like a win to me. Question number 6. Obviously, as we approach retirement, our thinking, it can change. So in your mind, is it more important to avoid big losses or to focus on growth?
Well, what's Warren Buffett's number one rule?
Don't lose the money. I stole it from her.
And number 2 rule is follow rule number 1.
There you go.
So we want to avoid losses at all costs, okay? And we do that by using the alternatives that are out there. And we're building in those income checks, have some protective growth strategies, regular growth strategies for inflation. It can be done, and you need to start really focusing on that 3 to 5 years before retirement. If you're already in, it's not too late. We can still asset shift and work on that.
A very powerful answer. Question number 7. Who doesn't love guaranteed money? Annuities are an investment that can do that for your income. But why do you believe so many people are hesitant to buy one?
Yeah, so there's a variation of annuities out there, and there's a couple of dogs out there that gave the good ones a bad name. So we got the immediate annuity, we got the fixed annuity, the variable, and the index annuity. And it's that immediate annuity people dislike, and that variable because they're loaded in 3 to 5% fees. I'd rather you go to a mutual fund in that case.
Absolutely.
So with annuities, don't fall in love with them. Don't disregard them. What you need to figure out is it a useful tool to help you with your income and your protection needs in the future? Because it's not cookie cutter, and not everybody who walks in our office do we say, hey, let's go down that route. But it is definitely a great tool as one of the many alternatives out there.
Understood. How about that? So basically, get educated on what they are before you judge them.
Because they are a little confusing.
Yeah, sure.
And you really need to get in the know, and you need to read a couple of books about it. Don't read everything that you see online. So it's all about getting educated, having the knowledge, and then you'll be able to put pen to pencil in making that decision.
All right, absolutely. Great news. We're at the halftime point. 7 out of the 15 questions, so still 8 when we come back out the gates. We're going to pause the clock. Great information, which is why Charisse has a great offer for our viewers at home. Right now, for the first 5 callers with a portfolio of $500,000 or greater, she is offering a complimentary, full-blown retirement plan just for you. This will allow the team at Zinnia Wealth Management to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 352-309-0775. That's 352-309-0775. Back on the clock we go. Topic number 8 of 15 in 15. We've worked decades to get to retirement. We want to travel, see the world, do fun things with our families. So, Charisse, how do we go about maximizing our lifestyle in retirement?
Well, I like dreamers, and we want to plan for that dream because it actually can happen.
Sure.
It's a magical thing that takes place. But how do we plan for it? Well, number one, we don't shove all of our money in the stock market because when the stock market crashes and comes tumbling, the knife drop, it's painful, and you're not booking any trips for probably 4 to 6 years. So we want to have some alternatives, some safe money strategies, and income planning to adjust when times like that do unfold.
Yeah.
So we can plan those trips.
And there you have it, but no winners if you don't get to plan them. Question number 9, fees. I've heard them compared to termites just eating away at your retirement savings. What can realistically happen to our savings if we don't plan for these fees?
Well, it's a rude awakening, and it will erode your portfolio.
Wow.
In retirement, if we're going to accept a lower rate of return because we're becoming more conservative, then we need to also talk to our advisors, your advisory firms, and say, hey, I'm not making as much, so you shouldn't make as much. And this is what you got to do. You got to negotiate. So we need fees down. We want them under 1%.
As a real convo, question number 10, 401ks. Lots of people have them. Lots of people are relying on them for income in retirement. But how common is it for parts of someone's 401k to be underperforming?
Well, here's the deal. 401ks are absolutely underperforming, especially if you're in those target retirement date funds, because as you get closer to retirement, they put you in these bond funds and more cash funds, and bonds are under stress as interest rates go up. Bond values go down, and the cash funds they're losing. So we have to be extra careful with those 401ks. And I'm going to tell you, if you have old 401ks, consolidate them. Let's move into an IRA, because a 401k has a small menu. They're loaded in fees. If you move it with a local advisory team that you like or that you trust, you can really make it work. And if you're 59 and a half and still working, do you know that most companies allow you to roll your 401k money to an IRA, no taxes, no penalty? And you can start creating that plan, and you can also do in-service distributions earlier than that.
All right, so lots of options. Got to get dialed in. Question number 11, once upon a time, pensions were standard. You collected Social Security, and a few mutual funds and bonds carried you to retirement. But how have the rules to retirement planning changed?
I'm going to tell you, the great generation had it at best with that 3-legged stool plan. Retirement has changed. Bonds are under stress, like we just talked about. Cash, you can't go get a CD for 3 or 4% anymore. So we have to look at alternatives. You have to look at the new changes, because there's a lot of stuff out there that's really exciting, and I get really excited to talk to retirees about it because nobody else is doing it. So we want to preserve, protect, and grow our wealth.
Absolutely. Question number 12, we discussed that really being ready for retirement is both a mental and a financial question. So how many people really know the answer to that question? Am I really ready to retire?
It is psychological, it's mental, and a lot of people who do retire, they're only retiring because they're sick and tired of being sick and tired at work. So they don't know that they're ready. And 75% of people do not create income plans nor sit down with financial advisors out there. So we encourage, get the plan going, get it in writing, understand it, find that advisory team that educates you, spells everything out for you so that you see the roadmap, you see where the withdrawals are coming from, and there's no question. And then you will leave retirement stress-free down the road.
That's a win right there. You want to know how your money's working. Question number 13, focusing in on long-term care. What can people do to prepare for it without having to buy some huge insurance policy?
Sure. So a lot of people can self-fund their own long-term care.
Okay.
You can have kids come in and take care of you, but I know I wouldn't want my kids to take care of me. You can buy the old school long-term care policies, but the new thinking is, if I don't use it, I don't want to lose it, because my parents never used it and they thought it was a waste of money, but there is value there. But we like the new alternative, buying a life insurance policy that has a long-term care rider in it, because if you don't use it, you don't lose it, and your spouse who's still alive will get that benefit tax-free, and or it goes to your beneficiary. So it's a great option. If you have that dead money sitting around in the bank, I know a lot of you have it.
Dead money.
You can do lump sums with these insurance companies, and you put $100,000 in, they guarantee a $250,000 death benefit depending on your age, and a $400,000 long-term care benefit. This will help cover the gap that you need to make sure you don't spend all your assets on the retirement plan.
I really cheated you with, I'm cutting you off, I really cheated you on this 15 and 15 because we need to make it like 15 and 60 because you were dialed in with this information. I want to jump back to an old school theory real quick. Buy and hold, does it still apply?
Listen, buy and hold applies, but not on all your dollars. Buy and hold does not work when we're in retirement, and now we are seeking to take income off of it. Let's say you have $1 million portfolio and you're in some of the best dividend stocks out there because you believe it, your parents did it, everybody else is doing it, and you're sitting around the water cooler and they're all doing it. But if you need $40,000 off that $1 million, guess what? Even those precious staples, Duke Energies, you know it, the Walmarts, the staples of our universe, Walmart and Colgate, they're still going to lose 30 and 40%. And now that dividend is probably not going to be enough to subsidize your income, and now you're going to have to sell those stocks when you shouldn't. That's a cardinal sin. Never sell when the market's going down. So that's why you have to have other strategies.
Absolutely. All right, final question of 15 and 15. This one has gained a lot of steam. Cryptocurrency. Is that a wise investment strategy for retirees?
So I love cryptocurrency. You know, I've been diving into it myself for a long time now. And it was just last year I was telling our clients, hey, if we don't have to maximize income and we have this speculative bet part of our portfolio and you're just leaving it for a legacy and you're willing to lose 100% of it because we're going to hopefully gain 1,000%. I'm okay with a little bit of investments, but I really want people to stay away from it unless you got the extra cash flow and you're leaving it as a legacy. Just like when we buy gold, we leave it as a legacy. Most people don't spend it. They just toss it underneath the mattress. You know what I mean?
Okay, so some fun money, if you will. All right, great news. You were off the clock. You dominated it, so great job.